Third quarter results just hitting from PepsiCo. Earnings there coming in at $2.29 a share. That was 3 cents ahead of estimates. Revenue coming in at $23.9 billion, also topping expectations. The company says that it now expects adjusted earnings to decline by about 0.5% for the full year. That's an improvement from the prior guidance and better than Wall Street had anticipated. Pepsi also naming Steve Schmidt as the EVP and CFO. That's effective November 10th. Outgoing CFO Jamie Caulfield is going to be retiring next year after 30 years with the company. You can see that stock right now off by about 63 cents. But, guys, what they're doing in the release that they're putting out with this is kind of pointing out that they're going to be aggressively targeting, trying to improve things at the food business, at the food division.
Organic revenue growth, too, right?
Yeah, organic revenue growth as well. But one of the things they're really talking about is they say they expect the business to remain resilient, but they are going to be very closely looking at this, aggressively prioritizing faster organic revenue growth and improving their core. Improving the food department's performance is a top priority. They say they're laser focused on improving their marketplace competitiveness, accelerating business momentum, and improving their profitability in the coming months and quarters. Also say basically they're going to be listening to just about anybody and everybody, that they take all of their shareholder views into account, which makes it sound like they are either thinking they're going to be getting an activist investor that comes in or trying to ward off activist investors, saying we see the problems here, we're going to.
They don't just listen to those people. I think they listen to customers too.
About what they like.
Do they watch the show? Did you get your?
What did you get? I didn't break into it.
It said right there, we know you like Fritos. Oh, my God. I mean, they're not bribing me, although it is like the finest company and the stock is so cheap here. But no, I'm kidding. They're not bribing me. But, yeah, I got some chili cheese. I got some regular.
Rally.
And it said,
chili
we know.
Fritos?
Yeah, we know you like Fritos. And, it's, you know, did you get your bag? They send you all kale chips, right? Because they know, you know, the sort of the kale or the, I don't know, what are the cauliflower things or. Did you get your bag?
I don't know. I arrived home late last night. I'm not sure.
Can you call one of the door people or handlers or whatever?
Staff.
One of your staff.
Staff is what you're referring to. Can I call one of the staff?
Can you call one of your? You got one, right? Did you look?
I didn't look.
How can you? I wasn't even home, and I found out what was in.
I don't know, but look, the language around this is a little different than what we've heard in the past. PepsiCo Foods North American continues to work towards improving its performance trajectory with a high sense of urgency. They do say the business made good progress on advancing permissible snack offerings, deploying more efficient trade promotional programs, and aggressively reducing costs. Elevated promotional activity at the Frito-Lay and strong performance within Quaker Foods. They go on and on about this, but there's a lot of talk here. What they did say is doing well, things like pork rinds, sun chips, unflavored tortilla chips. They are gaining market share in those areas. But, guys, you could probably tie this to some of the broader trends we've seen with people wanting to make sure that they're very, very conscious about the carbs they're putting into their body, be very conscious about the snacks that they're eating in these ways.
Are they, though? I think we've come back to anything in moderation. Yeah, exactly. Anything in moderation. The question is, who's got the right business model, Coke or Pepsi?
Yeah, good question.
Because I thought it was Pepsi, but then for a while we thought it wasn't Pepsi.
Yeah.
Right.
Yeah.
Because we understand this
Actually, check this out. Shares are up 1.5%. They were down initially when we first reported this, and now you can see the shares are up 1.5%. So maybe the street likes seeing that they are going to be taking aggressive tack.